Welcome to the Night Trader Club. We find opportunities in the market and make some money. Before we get into another community request, hit the like, subscribe, and notification buttons. Don't forget, if you're a subscriber, then send in a stock or ticker by request. Enjoy the video. Let's talk a little bit about Denison Mines, ticker DNN. I want to point out 3 of the things that you should be paying attention to if you're thinking about opening up a position in DNN anytime soon. The first thing that you should pay attention to are the support and resistance levels. Then you should pay attention to the moving average and then the RSI. As far as the support and resistance levels, those were generated from some short-term trading. That near-term trading was this week. You had a high of $1.50, an average high of $1.50, which gives you resistance level 1, which is this red line here. And then we had the average lows, some distinct lows at $1.25. So that's the trading band that you want DNN to hold. If you want to open up a position in DNN sometime soon, you want to see DNN stay above support level 1. Blue line, the first blue line, support level 1. Stay above $1.25. If it falls below $1.25, that is not a good sign. If it does fall below $1.25, there's a secondary support level of $1. So I wouldn't place any trades if it falls below $1.25, but if you are thinking about holding DNN, maybe reevaluate it when it gets back down to that $1 level, so keep it on the radar. But you want to see that hold for near-term trades. You want to see it hold above support level 1. If it does hold above support level 1, your next area of resistance will be this week's resistance of $1.50. So watch out for trying to punch through $1.50. That's a pretty psychological barrier. If you notice there every 25 cents you have resistance level 1 at $1.50, support 1 at $1.25, and support 2 is down at $1. So $1, $1.25, and $1.50. As far as the second thing you should pay attention to, that's the moving average here. So if we go to the 1-month chart here, you want to look at this moving average. So this yellow line is the 50-day moving average. So this is the average share price over the last 50 days. So what's going to happen here is these two have to come back together at some point in time. So the last time these two met, the moving average and the share price met, the share price punched through the moving average and there was a big bull run for a while. So you have to determine what's going to happen next. Is the share price going to come down to the moving average, or is the moving average going to move up to the share price? All right, so a tool you can use to help figure that out is the RSI. So we're going to move to the 3-month chart. I want to go ahead and clear off this chart for you really quick. Clear off the chart and look, you have just the share price, the moving average, and the RSI. Now that we're talking about the RSI, the relative strength index, this is an indicator that is telling you whether the stock is currently overbought or oversold. So if it is currently overbought right now, that means, which it's indicating, that means some selling has to happen. All right. So if you're wondering what is more likely to happen right now, is the moving average going to move up with the share price, or is the share price going to move down to the moving average? I would direct your attention down here to the RSI and say pay attention to that. And even as you're looking at short-term trades, look at that RSI. Find out if they're you want to track, are they overbought or oversold, and that'll help influence some of the other indicators that you're paying attention to. That's going to wrap it up for today. I hope you guys learned something and this helped you out with your potential trade into DNN. If you have any questions, feel free to reach out to me in the comment section. Thank you. I hope you found the information in this video useful. If you have any questions about this stock or a request for a new video, then reach out to me in the comments or on Twitter. Thanks for sticking around, and I'll see you in the next one.